Antonopoulos.
Thomas, we're back, my friend. Bootstrapping in America? No.
No.
Special guest.
We are, and I hope I say the last name, Andreas Antonopoulos.
Yes.
Beautiful. Andreas, thank you so much for coming in.
Thanks for having me. It's a pleasure.
I don't know what you're doing in Chicago. I don't know where's your home base. Is it?
Home base is in San Francisco. I'm just visiting a couple of days for business, and this was a great opportunity to come and see you.
Unbelievable. Sometimes
it works out.
Sometimes the moons align and everything works out.
I love when a plan comes together.
So we did a Bitcoin piece a couple of weeks ago with a bunch of the smartest people we have in-house that have worked with us, all developers and CTOs and oh, let me get this. And as we're doing the Bitcoin piece, that night, a bunch of people sent me a video. And the video was of you. And I'm like, wow, this is interesting.
So we crowdsourced them? I mean,
we crowdsourced them.
Pretty much?
Yeah, we crowdsourced them. Out of thin blue air, I'm watching this video, and it's the strangest video, Tony, I think I've ever seen. They're serving lunch. And plates are clacking, and I've never seen a video like that.
The audio is terrible. And
terrible.
It's just because it's a restaurant, and I was just speaking at dinner for some people, and they decided to video it. It wasn't really planned.
Right, and exactly. And I'm like, this is the craziest thing. This is like somebody holding a camera, and then I noticed like 40 or 50,000 people had watched this video, and I'm thinking, and this is a pretty long video. It's 45 minutes or so.
Yeah.
And I'm watching this video, and I'm like, wow, this is fascinating. I sat there, and I never watch any videos. I watch a video for 30 seconds. I watched your video for 45 minutes.
Wow,
so you engaged me.
Oh, thank you.
And we were lucky enough to have, like I said, everything lined up, and you ended up in Chicago. So again, thank you so much for coming on.
It's an absolute pleasure.
So, Andreas, we have about 15, 17 minutes, and what I'd like to do is I thought you covered some incredible you gave incredible depth to the whole Bitcoin discussion. But before we start, there was because we're in the financial service space, the financial technology space, that seems to be, you're an expert domain specialist there. One of the comments you made was that there was this incredible amount of, for the lack of a better term, richness in the financial service space. And because of that, there seems to be maybe maybe we're lagging as far as evolving into, as far as that space goes, evolving product-wise and technology-wise. You want to comment on that a little bit?
Yeah, I mean, it's really astounding the fact that there's so much opportunity within financial services to simply find the flow of money, stick a straw in it, and rent seek until your heart's content, be protected by regulators from any competition. That essentially all of the innovation is being sucked out of the industry. I mean, credit cards are 1950s technology, never designed for the internet, and yet here we are trying to use them with all of the fraud issues and identity theft issues. And if you look generally at the development of innovation in financial services, nothing much has happened for the last 50 years. And here's why. The simple reason is that before you innovate at all in financial services, you have to ask permission. And what's really amazing about Bitcoin is, like the internet, it allows innovation at the edges of the network, innovation without permission. So just by existing, it's unleashed this pent-up 50 years of innovation that hasn't happened in financial services. Here we are in a world where it costs $74 billion a year to send remittances to foreign countries, a problem that affects some of the poorest people in the world. And yet the greatest innovation in financial services is tap to pay, so that you don't have to actually swipe. Okay, so I save like 5 calories there in my busy day, and I can shop faster. It's such a bubble of inane innovation that it's really shocking.
One of the comments that I've made multiple times since we've started to have a few of these Bitcoin discussions has been, I'm not sure where Bitcoins are going. I'm not even close to even a lousy expert on this topic. But one of the things we've noticed that's just jumped out and bit me is that so many of we have an incredible team of financial technologists. So we build software. We built ThinkerSim, the trading platform, and now we're building a new trading platform called Doe, they're both really innovative platforms. But the developers we use, which are our own team, have never really gotten into trading and investing before. They've never really gotten into their own domain other than to build the technology. As soon as Bitcoin comes around, next thing you know, the developers are trading Bitcoins.
Yes.
And I'm saying to myself, well, if nothing else happens from all this whole Bitcoin discussion, all my developers now are trading.
Yeah.
And so there is a really positive takeaway, at least in that regard, which is what you just mentioned.
Yes, it's igniting kind of this new innovation within the industry. The trick here to understand, I think, is that Bitcoin itself is four different things with the same name. So there's Bitcoin, the currency, and everybody's focusing on the currency itself, and that's just the tip of the iceberg. Bitcoin is essentially an invention that allows a decentralized network to agree on a ledger of assets, to agree on what transactions are happening. That invention in itself is revolutionary in computer science terms, and it changes a lot of things. It allows us to do things at scale that prior to now required a hierarchical organization. So on top of this invention, we've got a technology, a peer-to-peer network, and a currency. But currency is just the first app. This is not just money for the internet. The real way to look at it is this is a new internet of money. It's a network that can carry financial transactions. It can create new financial instruments. It's the first programmable money in history. And so if you look at it from that perspective, it's a really exciting innovation. But the ability to buy the currency actually puts you in at the ground level of a global IPO of a new technology. When the internet came out, you couldn't just buy a share for the whole industry.
Sure.
In 1991. Well, with Bitcoin, you can, and that's pretty amazing.
So then I guess there's no question you feel like Bitcoin's here to stay. It's revolutionary, all this stuff. But does it actually get to the next level before it becomes much more accepted transaction? I don't see it becoming a true.
I mean, sugar used to be a traded commodity.
Well, I don't see it being a commodity until it becomes until there's much more transactional occurrences.
Well, we're still very early days here. I mean, this is a technology that's only existed for 5 years and has shown tremendous growth. But if you look at it from the perspective of a currency at $10 billion or so, it's tiny. It's not even a tropical island worth of an economy.
That's right.
And, this on top of the possible economy of 3 billion people on the internet, that's a pretty big size to grow to. So in terms of adoption, we're very early stages. And I don't think it is mainstream or anywhere near mainstream yet. I think it's about where the internet was in 1991. We've probably got 2 years before you see broad adoption. And it probably won't happen in the U.S. first. It will happen in some of the developing nations, Southeast Asia, Latin America, very hot spots right now.
We're making the argument here in the getting back to the financial services and the financial technology space, and that one of the limitations of any kind of global market access, like I could theoretically access a market on my trading platform in Japan or in Germany or wherever else it is, but I can't clear the trades.
Mm-hmm, yeah.
So I can't do the currency conversion, and I can't actually do the clearing. I can't do the clearing side. So this whole concept of global, financial global integration doesn't really exist.
Right.
My guess is that that's one of the really amazing potential upsides of virtual currency or algorithmic currency would be that plus we can't even clear an ACH trade between the U.S. and Singapore because we don't know if the money's going to be good, and international transfers take forever. So I think one of the interesting things about Bitcoin is it could transform. Like you mentioned before, how far behind the financial service space is, it could transform that space almost overnight.
Yes.
If it's an accepted, if we can move money.
Well, it's an open network, and it's the first form of completely frictionless money. And the other thing it does, which is rather interesting, is that in almost all financial transactions, there are multiple counterparties in the way. In Bitcoin, there are only two parties, the sender and the recipient. There is no third counterparty risk. There is no central control in the network. Once you create a transaction and it's properly redeemable by the recipient can redeem it anywhere in the world, and there's no one that can stop that. So that removes a lot of risk that in the traditional financial services environment is dealt with fees and overheads and friction created to protect against fraud. So with Bitcoin, you don't have any of that.
That's also its downfall too, right? I mean, because now all of a sudden there's no regulatory body that's sanctioning whether this is money laundering or anything else like that.
Well, I mean, yeah. Well, if you want to look at money laundering, most of the money laundering is done by one of the big six banks, and they usually get away with it and don't go to jail. So in terms of money laundering, I would say
Two wrongs don't make a right.
Yeah, but Bitcoin is a drop in the ocean right now. So there are ways to obviously track and follow transactions on the Bitcoin network. And it does create a completely new environment because it's frictionless. A lot of the regulation will have to adapt, just as it had to adapt to the internet age. But it also offers this tremendous opportunity to reduce overhead.
100% agree. I mean, it's exciting. I mean, it's new.
Yeah. Here, it's a $20 billion market. Would you say $12 billion market or something right now? Marketplace?
It's not even 12. I think it's about 8 to 10 at the moment. It swings a lot. So yeah. It's a tiny volatility. Right. It's a tiny pool of liquidity. So anytime someone sneezes, it sloshes around.
So that's my next question. So you're talking about a $10 billion marketplace or a $10 billion market cap, or however you want to put it.
When Apple was down $9 the other day, that was about the same equivalent.
Right,
that's
right. Yes. But the problem with it is when Apple's down $9, Apple has billions of dollars of liquidity.
Mm-hmm.
With Bitcoin, if you went in there to trade to move $10 million. I guess what I'm trying to say is it's a tiny little marketplace.
It is.
You come in with $10 million to buy or sell, you can move the market $100, $200.
Right. And at the moment, most of the little shocks you see are really liquidity shocks. They're when one of the exchanges gets constrained because of a new regulation, or they shut down one of its bank accounts, or another new liquidity pool opens in a new country. And so even just small changes in liquidity have disproportionate changes in the price.
Of course. So the next question becomes, in order to go mainstream, don't you have to have things like the ability to borrow against, or the ability to borrow against I would think that's a starting point. The ability to at least know who your counterparty is. Like for me, I would love to trade Bitcoins. I don't want to trade that small. I like to trade more depth, more efficiency in the marketplace. But I would do it just for the hell of it. I don't know who my counterparty is.
Right.
And that's my biggest fear.
There are a couple of regulated markets, and for example in Europe. And those markets provide relatively stable pools of liquidity that you can trade in. But what we're seeing right now is a currency that's still nascent, and as it's growing, if you look at the if you look at the price on a log chart, you'll see that the volatility is actually decreasing over time. So even though it seems volatile now, it was way more volatile a year ago and twice as much a year before that. So as the market size increases, volatility decreases, and we're finding more and more regulators, especially in some of the countries that have bank havens or banking regulations that are more friendly to traders. You'll see those countries are getting very interested in providing both avenues for institutional investors as well as liquidity pools for retail investors.
You're as a domain expert in the field, what's the risk of a flaw in this?
Yeah. So I think at the moment the primary risk to Bitcoin is internal, because most of the external forces can't affect it. But in terms of a flaw, well, I mean, this is software that has been scrutinized, and not just scrutinized, but I think we need to understand attacked. Like deliberately attacked by thousands and thousands of hackers for the last 5 years. If you think about it one way, there's a $10 billion bounty for the first person who breaks it, and they haven't been able to break it. So really right now the biggest risk is new changes and features that go into the code. And the developers are very conservative and very careful in how features are rolled out, so there's always the opportunity to test them as well as to back out if there's a problem.
Is there I think for me and for Tony and for a lot of people, we have this fear of our wealth being on our computer. Mm-hmm. And I don't exactly know the terms you use. You used a little more sophisticated explanation of that, but it makes me nervous.
I'll put it in very simple terms.
Okay.
As a species, we have 4.5 million years of experience in doing physical security. From the first time a caveman put a squirrel under a rock so the other caveman wouldn't eat it, right? And we've got maybe 50 years of information security, and frankly, we suck at it.
Yeah.
So taking money, the most liquid money possible, that's so easy to move, and putting it on a general purpose computer, that's a challenge, and that's one of the main technological issues right now that we're trying to address with Bitcoin. So we're going to see the development of...
So what's the most reliable, in your opinion, what's the most reliable wallet then if I wanted to go purchase or sell a Bitcoin?
So I actually use blockchain.info. One of the reasons is that they don't store the keys in an unencrypted form, so that your password, and with second factor authentication or secondary password, you can achieve a high level of security. And even if their service was compromised or liquidated or shut down, you can restore the funds elsewhere independently right off the Bitcoin network. So that's one of the services I enjoy using. We're seeing now hardware wallets that are coming out. So tamper-proof devices that you plug into USB. So all of the keys are on hardware designed to do nothing but keep them secure.
Andreas, how often, I assume you own Bitcoin right now,
Yes.
and how often do you actually trade Bitcoin?
So I have a very sophisticated trading strategy. I buy on Mondays.
Fair enough.
That's it. Basically, every Monday I buy a bit of Bitcoin, as much as I can afford, depending on the week, depending on the price. But I take.
And Monday, because it ends in Y?
But because it ends in Y, it's really as simple as that. I just wanted to pick one day so that I'm not affected by the price and I don't think about it. It's a long-term dollar cost average strategy, buy and hold.
You know that dollar cost average does not beat lump sum investing, but it just depends how much money you have.
I don't have lump sums,
okay,
so I'm invested in my career. So
yeah,
it's just a little trickle strategy.
So every Monday, and obviously you probably tweak that a little bit. If Bitcoin had a rough weekend, you buy more.
Yes, I do opportunistically buy more. I don't sell. I do use Bitcoin to pay contractors, to buy services, to push my businesses, and to pay salaries for my businesses in Bitcoin.
So you have used Bitcoin, and you've started to use it more and more in a transactional nature.
Absolutely, yeah. But because I also believe in it, and I also want to use it, especially for offshore services and things like that, international payments, which are particularly difficult with other currencies. I can do them much better with Bitcoin.
That's really fascinating. Because you're the first person. Well, we had the founder of BitPay on.
Tony was here.
Tony was here. Yeah, really nice guy. I met him before, but I didn't do enough homework before he was here. I took it for granted that I could kind of work my way through it, and since then I've been reading Bitcoin Magazine and talking to every expert I can get my hands on, just trying to learn more and more about more and more about the space, and it's really. I've been going. I haven't bought any yet, which is crazy for me.
$684 looks like the last trade in U.S. money.
Well, I was watching it. It was up 700s this morning, then back down, and
719 to 630.
Yeah,
according to the.
It's been an exciting couple of weeks in terms of volatility, because we first had a huge influx of liquidity when China woke up, essentially, and then the regulators got a bit spooked and shut down some.
What
of the
is the implied
networks.
Volatility in Bitcoin? Do you know what it is? I don't know.
I don't know, but we're seeing massive swings right now.
Right. I'm just curious what the actual implied volatility is, because we like to figure out kind of derivatives on anything.
Yes, I wouldn't. Yeah, I'm not a charting expert.
Oh, no, it wouldn't be charting. Just trying to figure out where the derivatives markets are. So kind of in wrapping up here, just curious, where do you think the upside is in Bitcoin? I mean, the downside's easy because it's always going to have a little bit of value, and it's relatively cheap, I guess, now. But what do you think the upside is here? I've read crazy stuff, and I'm just curious, like, somebody that's a practical approach to investing in Bitcoin.
Quite honestly, I think if Bitcoin grows to encompass a larger part of the internet economy alone, then we're probably looking at 5 figures for one Bitcoin, so 10,000 to 100,000 in terms of pricing within the next couple of years. The alternative scenario is that it has a major flaw and crashes, but really there's no intermediate way. It's not really a linear growth type of thing.
But what about all the other kind of cryptocurrencies and cybercurrencies?
I think they're interesting as laboratory experiments. I don't think they really have a chance at the moment. The network effect and the stickiness of the Bitcoin ecosystem brand, sunk investment, the silicon investment, all of that makes it pretty much unstoppable in terms of competition with other currencies.
But the risk of flaw, I guess that'd be similar to the risk of a stock market crash, right? I mean,
yes.
Okay.
But, it has to be not only a flaw, but a flaw that can't be fixed. And we've had a couple of flaws that sometimes caused problems over several hours that were then fixed in real time, and the network was restarted and just survived it fine. So Bitcoin is a survivor. It just keeps surviving, and that's part of the reason why people call it the honey badger of money,
Mm-hmm. So in a perfect world, what Bitcoin does is it comes in and it changes the financial, the whole financial. I don't like the word financial services, but it changes the whole business of finance. It tightens it up.
It's certainly time. It will not give opportunities for certain companies to make these ridiculous profit margins. They're going to have to compete against something that has low overheads. So even if they co-opt and try to adapt, they're going to have to co-opt into a new business model that's far less profitable, just like the news and entertainment media have with the internet.
Yeah, because what happened in Bitcoin, which is really interesting, is that essentially they created hardware for Bitcoin. Fast hardware.
It's now pushing Moore's law faster than general purpose computing, which is quite outstanding.
Right. Exactly.
And this is because the financial incentives are perfectly aligned. It's a very tight feedback loop in that market.
We make the same argument in a crazy way. We make the same roundabout argument for high frequency trading. That if it wasn't for high frequency trading, we would be on technology from 30 years ago.
Right.
And so we make that same argument. Andreas, thank you so much for coming in. That was awesome.
Thanks for having me. Thanks.
Really do appreciate it. We'll be back in 90 seconds. We got the opening bell next. This is Tastytrade Live.